All right, so welcome to the next video. So in this video, I'll be explaining the concept of order block, and we call it the supply and demand order block. All right. So in order blocks simply means like where we're having stack of orders, limit orders, where people want to execute their trades. All right. So probably it might be sell limit, it might be buy limit. Okay. So but then the major thing you have to learn in this course is knowing the bearish and the bullish order blocks, right? Which is just the supply and demand. Now, for the bullish order block, we need to see the last set candle before the buy candle that breaks the structure. All right. Now, that is for the bullish order block. So you can call it a demand zone. All right. Then for the bearish order block, you need to see the last buy candle before the sell candle that breaks a structure. Right. So it's just there, like just simple, right? But then it's all about you identifying all these things on your chart, like seeing them, like training your eyes for you to see all these things. Okay. So I'll be giving you guys series of examples on how to identify your last sell candle before the buy candle that breaks a structure. Remember, in our previous video, I showed us how to identify our structure, knowing the market structures, knowing your internal and external structures. All right. So now I have to show you guys how to identify the last sell candle before the buy candle that breaks a structure, all right, for the bullish order block, and the last buy candle for the second that breaks a structure with an imbalance. And I know some of you might be new or might really don't understand the concept of an imbalance, so I'll be explaining everything. So but in this video, I'll be talking about the order block. So what are order blocks? Like I said, order blocks are where limit order are being placed, where traders are actually waiting for market to come and mitigate, to come into that zone, and they take their buy position or their sell position. And then mitigation simply means waiting for price to just activate you, come tapping into your zone, and it moves either your direction or probably against you. Right. So now let me now explain it. So like I said in our last videos, all right, the market structures, price giving you a series of higher highs and higher lows, it means is an uptrend. Price giving you a series of lower lows and lower high, it means it's a downtrend. So in a downtrend, you'll be looking at for selling opportunities, and in an uptrend, you'll be looking at for buying opportunities. So now in this situation, we're talking about the bullish order block. So we need to see the last sell candle before the buy candle that breaks a structure. Now this is how it looks like. So you now see a candle like this. All right. So okay. So now this. Let me show this time. So we are having an assumption that, first of all, in anything when it comes to candlesticks and all that, you need to know any color you're using. You just need to know which one is going up and which one is coming down. It could be black, it could be red, it could be green. So you can choose any color of your choice. All right. So in this situation, I'm using this color. All right. So now we're assuming that this is my sell candle and this is my buy candle. So now in an uptrend, you need to see stuff like this. Now, anytime price breaks your most recent high, we call it the break of structure, which I explained properly in our last video. All right. In our first video rather. And then we're having a break of structure here. So in this situation, anytime market breaks a structure towards an upside, which is giving a sign that market is like that is market wants to buy up, then it definitely leaves the last sell candle before the buy candle that break a structure. That is the last sell candle before the buy candle that breaks this particular high. All right. So if you see something like this somewhere here, let me see, coming. So we'll be seeing something like this here. right? Right. So so we see something like this here, and then price moving down, tapping, and then before pushing up. All right. So in this situation, and so once we see our last sell candle before the buy candle that breaks this structure, okay, all we need to do is just for us to identify which one is the last sell candle before the buy candle that breaks our structure. Now in this situation, this is our sell candle and this is our buy candle. So we're assuming that this particular buy candle made the push make the push, remember, that breaks this structure here. So all you need to do is just set your limit order. All right, you identify it. So this is your last sell candle before the buy candle. So you can use your box tool from your trading view and draw it like this into the future. This is how we do it. So now in this situation, since we're able to identify the last sell candle before the buy candle that breaks a structure, right? So we just need to wait for price to go up, come down, give us a mitigation here, and then push up. That is all, right? So you're able to successfully identify your last second before the buy candle that breaks the structure, which is your bullish order block, all right? So, but then in the bearish order block, you need to identify the last buy candle before the second candle that breaks the structure. So let's say this is your buy candle, this is your buy candle, all right? And then this is your sell candle. Hope you guys can hear me. Hope you guys can hear me. Yeah, all right. So this is your sell candle, all right. So you need to identify the last buy candle before the sell candle that breaks the structure with an imbalance. In our next class, I'll explain imbalance concept. So I'm just trying to give you guys um an understanding of an order block because order block, imbalance, liquidity, they all work hand in hand. So I'm trying to break this in bit by bit, and then in our next videos, after breaking down all these things, we'll now combine all these things and make it a confluence, like have a frame of it to form our trade ideas. All right. So now we're having the last buy candle before the second that breaks the structure. So once you're able to identify it on your chart, all you need to do is come here and you draw it into the future. So you're waiting for what price to move down, tap in, and then push down. All right. So this is why I said that in an order block, people are actually looking for you to buy in a bullish order block, and people are actually looking for you to buy in a, I mean, to sell in a bearish order block. So limit order are being pending here. So people just said that limit order here, and why their stop loss will be here. All right. So just like this, and then they wait for price to come back, tap in and move. Same thing with the sell scenario. All right. Same thing with the sell scenario. So people are actually waiting. So you set your limit order here, stop loss here, set your limit order here, stop loss here, and you wait for price to mitigate you. So now let's go back to our chart and see if we can identify these things here. Now, like I said, in the last um, video, so you're able to see that we're actually in a bullish trend, all right? So now this is our high. These are so we had price moved above this our most recent high here. All right. So in this situation now you're actually waiting for price to pull back to this point here, to pull back then before moving up. Now that is the main thing. All right. So where is price pulling out to? Where is price trying to react to? Price is actually looking out for your last buy candle, your last sell candle before the buy candle that breaks the structure. All right. So it could be the last second and the last second before the buy candle that breaks the structure. It could be an inside bar. Okay. So any of this. So now in the one from our 1 hour perspective, we're having an inside bar here. All right. So you can actually take this your inside bar here as your last second before the buy candle, because if I scale down to 15 minutes time frame, I will see it more clear. But then for the purpose of what I just explained now, let's use the normal one that we know, the one I explained here. Now in this situation, we can see clearly that we had price moved above here and then push down, then price moved above here again. All right, break of structure. So in this situation now, where's our last sell candle before the buy candle that breaks the structure? Our last sell candle before the buy candle that move price to go above this zone here. That move price to go above this zone. Yeah. Right. So like I said, the last sell candle before the buy candle that breaks the structure with an imbalance, you draw it into the future. So the expectation is this: you're expecting price to pull back to this point here and go up. Yeah, I know price did not mitigate this zone, and I'll explain why. All right, in our next video. But then in this concept, you have to understand that your strategy doesn't have to present itself always. All right. So once it presents itself, you take the opportunity. Now we're having what again? We're having another break of structure here. Yeah. All right. We had another break of structure. So where's our last sell candle before the buy candle that breaks the structure with an imbalance? Is this point here? Our last sell candle before the buy candle, we draw it in the future. So you can see clearly that price came back, tapping into the zone and moved, push before going up again. All right. Now let's see if we can identify more. It's all about you identifying all these things here. All right. So now look at this scenario. Now we had a break of structure here. Okay. So we had the break of structure. I believe that I believe that from the previous class we understood um, what break of structure is. So now where's our last second before the back candle that breaks the structure? This is the point here. So this is it here. All right. So this is an pure example of what a bullish order block, all right, or a demand zone. Now let's now identify our supply zone. So let me go back to 4 hours. So let me go back to 4 hours. So from the 4 hours perspective now, like I said that we need to see the last buy candle before the sell candle that breaks the structure with an imbalance. All right. So where is it? Yeah. So right now we're having what, a downtrend. So price moved above, it was low, failed to break this high, then push down, go up, and then push down. So already we are in a downtrend, isn't it? So now in this situation, where's our last buy candle before the second candle that breaks the structure? This is our last buy candle before this sell push that breaks this structure here. And this is our structure. Yeah. All right. This is our structure, yeah. And then you now draw your last buy candle before the second candle that breaks the structure into the future. So forget about if price is mitigating it or not. I'm just showing you guys how to identify it. Now we had our second break of structure here. Again, another break of structure here. Again. So where is our last buy candle before the second that breaks the structure? Is here. So other blocks are everywhere. Understand? Is how you use them that matters. All right. So we're still having what, our last buy candle before the second candle that breaks a structure. All right. Buy candle. Yeah. You can see. You can see also we're having a break of structure here. So here's our last buy candle that breaks the structure because it has the pressure that started from this point here. So we are having a break of structure here, right? So we had another break of structure here again. So we're having another break of structure here again. All right. So or another break or structure again here, because I said that anytime price is moving below your lower lows, it's giving you break or structures. All right. So your last buy candle before the second that breaks this structure is where, yeah, to draw it into the future. All right. So this is how to identify your supply and demand zones. All right. So it's that simple. Okay. So it's all about you knowing and identifying these things over and over again on your chart. So one of the things that you need to put in mind is that you use your 4 hours time frame or your higher time frame, which can be your 4 hours, your daily, or your 1 hour time frame, or your 15 minutes time frame, as your directional bias. Like I said directional bias is you knowing your expectation where the market is going to, and then you still use your higher time frame to draw your zones. So your zones is the same thing as your POI. POI simply means point of interest. All right. So you draw your zones, you draw your POI. So it's still the same thing. All right. So remember, I said that the higher time frame is for you to use that in identifying your trend. Where is the market going to? Is it an uptrend or a downtrend? Or is the market ranging or is the market being choppy? If the market is going up, you know you're looking out for buying opportunities. It simply means that you drawing your zones, your POI, for your that is your demand zones. And then if the market is selling, you know you'll be drawing your supply zones, which is your bearish order block, and if it's buying, which is your bullish order block. Okay, so you need to identify all these things so that to give you some level of clarity. Then after identifying it, knowing your directional bias and identify your zone, that is when you can actually scale down to lower time frame to start looking out for better opportunities. That is when you can also refine your OBs. So we have the refinement, which I'll also explain in our next video, in the videos to come and all that. So then, but in the next video, I'll be explaining what is imbalance, because you cannot just trade other blocks without imbalance. All right. So imbalance is just like a confluence to other block. So we use our imbalance, we use the other block, we use our imbalance and liquidity, all these things as confluence in order to create a trade idea and for us to trade properly. Okay. So in our next video, I'll be explaining what is an imbalance. All right. So thank you, and also see you in the next video.